It's kind of more of an intro one, and it's more designed for guys that are trying to trade themselves, that are looking at markets for the first time. You might like a company, you might like the story behind a company, you might have looked at the valuations, you might have an analyst that covers it and you like it, and you're just trying to make the final decision on when to buy and sell for your own account. And that's kind of what we're going to cover. So we're going to cover a couple of basic techniques today about how to do that. But let's see. I just want to give it until 12 o'clock so that everyone can load up and everyone can join, and then we can get started. Yeah, so we're pretty much on 12 o'clock now. Okay, let's start video. That's slightly. Okay, cool, guys. Well, welcome to the webinar. We are talking getting to know your technical charting patterns. So as I was saying up at the top, this is a little bit more fun than the usual webinars that we do. It's about the actual. It's the time when you need to make a decision to actually pull the trigger and buy and sell shares. And these are techniques that you can use to just help guide you as to, should you buy today? You've identified the company you like already. You already know what your position is going to be. You know you're going to buy this thing, but where are you going to buy it? Do you just dive straight into the market? Do you just pull the trigger as soon as you've made the decision? At what point do you make a decision to actually execute a share? And that's kind of what we're going to chat a little bit about today. So we're going to talk about getting to know your technical charting patterns. I'm going to do a little bit on support and resistance as well. And we're going to chat, then I'm going to open up the system. And I'm going to open it to you guys. Like we can go and look at whatever you want, and we can go and try and pick some technical levels on different shares. And we're going to see what we can come up with. We've been trading. I'll take you a little bit through the trading platform as well. If there's any questions, I'm going to be using ProTrader, which is the velocity platform. We use multiple different platforms. So offshore, we normally use DMA's platform. We also use Swissquote, which is a Swiss investment bank for clients as a custodian on more complex stuff. But if you're into trading, if you're into online trading, ProTrader is very good in the South African environment. It's a good multi-asset platform. It's got everything from Bitcoin on there, which is interesting because I heard Elon Musk now allows you to buy Bitcoin buy Teslas, at least with Bitcoin after his big purchase. He's now seems to want more. He'll actually give you cars in exchange for Bitcoin. So you can buy Bitcoin on there, but you can also buy all the usual shares. So you can buy MTN, Vodacom, Naspers, Sasol, all the usual suspects. You can also obviously trade a whole suite of CFD products on the larger stocks. Obviously, derivative instruments are restricted on very liquid, very small cap stocks. Again, something like York Timber, I don't think you're going to find a thing. Maybe I think Master Drilling might actually have a CFD on it, but you're probably not going to find it on those. But yeah, that's the platform that we're going to be chatting about. So, okay, before we get started, who are we? So I'm kind of chatting on behalf of Rand Swiss, which is a company I founded 5-6 years ago now, and yeah, it's currently the best online stockbroker in South Africa. So if you're into online trading, online stockbroking, we are the right platform. Like I said, the Velocity platform is an incredible platform for clients to use. It's very, very powerful. It's got a lot of features in it. And it's also quite easy to use once you get to know it, and that's kind of why we do these webinar sessions. We're doing them probably every 2 weeks. We've got a webinar coming up. And we do all sorts of different topics from fundamental stuff. I'd love to see more trading stuff. So it's the guys that really that are doing this themselves that require the most help. And these are obviously online forums where we can support you guys. And it's a way that's easy. I can get 100 people onto a webinar, and it takes an hour of my time, but it benefits a large amount of people. So that's kind of why we're doing it. And it's really something that we'd like to do more of. It's just there's time. We've got jobs as well. We've got to actually build portfolios and manage client relationships too. But to 2019, we won Best Stockbroker in South Africa. We just picked Standard Bank and ABSA, which is fantastic because we're a much, much smaller business than they are. We also came and stopped Advice Broker in 2019. We currently hold the best tax-free savings account as well, as we've obviously just had the tax year in switchover. So a little bit less pressure on clients to get that sorted, but we've got a very nice offering there as well. Obviously, People's Choice Award. So, what do we do? Okay, like I said, we are a company that partners with lots of different, we're a broker. essentially. So what we do is we face a retail client, and we have all these relationships that we can use in the background to kind of build up portfolios to do very different things in financial services for you. As I said, we work with Swissquote, which is an offshore bank, where we can do all sorts of little structures in there. We can give you a debit card that you can swipe in London when you're traveling. It's really cool stuff that we can do. It's an actual, you get an IBAN number, so an international bank account number there. But we do all the usual stuff. If you want to go offshore and using a Sanlam wrapper, we can do that. We can use the Momentum Wealth endowments if you wanted. All that kind of cool stuff. But our primary business really is listed down the side here. So we do online stockbroking, as I said, through a number of different platforms. But that's really where we give you the system depending on your requirement, and you make the decisions yourself. We have a private broking offering, so if you've got 5 million and up, and you can apply to be have a private broker at Rand Swiss, who will sit and help you through the actual day-to-day trades. They're going to kind of help you with ideas, anything that happens. It's kind of like the private banking offering at Rand Swiss, where you've got very, very high touch service. You can send WhatsApps to us, we'll reply, that kind of stuff. Managed portfolios, that's fully discretionary. I take care of that little segment of the business. So that's our global equity portfolio. We've got 5 years track record on that. It's looking really, really good. We've outperformed our benchmark, which is the MSCI World. Structured products, Viv takes care of structured products. We just concluded one, with Citibank. Very nice. It was a worst of, what was it? The worst of S&P 500, Euro stocks, and FTSE. And as long as all of those are positive in any quarter for now and to the next 5 years, you would have got an 11.5% dollar-based return. So we just closed that one. We got some nice funds into that. So we're happy with the structures, what's going on there. Obviously, we do all offshore transfers, wealth management. So I've talked about secretaries of account. So that's who we are. But as I said, today what we're going to focus on really is the online trading aspect of this. We're going to go through some basic technical charting. We're going to go through, as I said, we're going to go through some charting tools. Then I'm going to look at all the popular patterns and how to identify them. And we're going to do this live in the market as well. And I can tell you, I've been trading for a long time now. I'm getting very old. And I can tell you, as much as technicals get a bad rap, and I kind of always cringe when they send out the invites and go, Gary, you must go talk about technicals. And it's like, you kind of it doesn't seem as serious as hardcore fundamental analysis, where you're sitting there and you understanding the drivers behind the company. Sure, that makes for good long-term decisions. If you're picking a solid company with a good management team, they're going to come out with good announcements and they're going to make money if you've analyzed your business correctly. But charting is very much more short-term. And now, when I started in financial services in markets, I was a private client derivative trader. That's kind of where I got my break, and I started kind of executing for hedge funds. So I was sitting in front of screens all day, looking at little price movements going up and down, and having to make decisions on a constant basis, like, do we buy now? Do we buy later? When do we get in? When do we get out? And it's really where I came from. So it's one of those things that technicals sometimes get a bad rap, but technicals for me, it's a tool like any other tool. When you're looking at a financial instrument, a security that trades live on an exchange, of course you need to look at the fundamentals. You need to look at the mechanics of the product. You need to understand what you're buying in essence. But the technicals is just another way of looking at it. And we're going to go through a little bit more technical analysis about. But for me, it really is key. I've sat in hardcore sell-side fundamental presentations with CFA guys that are sitting there, chatting, that have regular lunches with management, and they only cover, 4 property stocks, and that's their whole life, to try and value and understand these property businesses. And when you ask them, where would you say your price targets are? I'm telling you, they whip out the charts and they start drawing trend lines and that, and they are applying technical analysis as well. So even the best, what I consider the best in the industry. So I look at it, I never think of myself as an analyst. I'm kind of a fan of analysts because I'm a portfolio manager. I sit and have to read all the analyst research, and I need to listen to the companies, but then listen to the kind of the academics around the companies, which is essentially what an analyst is, and kind of form, I'm on the buy side. So I have to make the decision, do I buy or do I sell at this level? And I really don't know how I would have gotten by without just the basics of charting. And that's why I always do this one. I do it once a year. And we chat about the different ways that you can get in and out of the stock market. Okay, so we're going to do some patterns, as I said, support and resistance. We're also going to look at when to trust technical analysis and when to be cautious. And then we're going to go, as I said, we're going to go and analyze some stocks together. and we're going to, you guys are welcome to kind of stick in whatever companies you want us to have a look at. Okay, so an introduction to charting tools. Okay, what is it? Okay, a type of financial analysis that uses patterns and market data to identify trends and make predictions. So, if you look at it, I've already talked a little bit about technicals versus fundamentals. When you're looking at technical analysis, all the answers are essentially already in the price. The ultimate thing, whenever you're called on as an analyst or whenever as an investor, you're called on to try and make a decision on how to value a company or value anything. I mean, I want to do a podcast soon. I've met this wonderful guy. He sold maps, like antique maps. So you can get maps, like 500-year-old maps. He actually works on the Rand Club. His name is James Findlay. And they have these amazing discussions on what creates value with them. It's easy, for shares, you can do a DCF. A share should be worth all the future cash, the present value of all future cash flows. That's technically what a share would be worth, because you've got legal contracts in place that that protect your rights as a shareholder. That mean that you will be paid dividends, that you are an owner of that means of production. That's where the value of a share comes from. But value is more than that as well. So value is also like there's the intrinsic value of a company. You look at something like how they used to value Tongaat a long time ago before the accounting scandals kicked in. But it was a business that had a huge amount of property that was being released. And you were kind of valuing it on that intrinsic value of that property. And all the numbers turned out that they weren't trustworthy. But there's a lot of ways to think about value. Now, what is the ultimate, the point I'm getting to is what is the ultimate way of understanding value, and what is the ultimate value of any asset, be it a house, be it a gold coin, be it a 500-year-old map or a share. The ultimate way, and it's the reality of the situation. It's not what you think the company is going to earn, what PE should it trade on, where should it trade. The ultimate determinant of what a company's value is the price that it's trading in. And that's it. Even though if you look at a company like GameStop, you can look at GameStop and you can say, and if you guys are familiar with the short squeeze that went on in GameStop, a $40 company that went to, I think it was over $450 at one point, and it was a defunct brick and mortar game retailer. There is no way that those assets could possibly justify that value. So someone valuing it and say, oh, it's not worth it. The fact is, because people were buying and selling at that price, and because you could sell GameStop at say $400 a share on a day earlier this year, that is the value of GameStop at that specific moment, because there's someone willing to buy it. Something is only worth, you might have heard that saying before, something is only worth what someone else is willing to pay for it. And that's the ultimate determinant of value. That's the real determinant of value. Now, technical analysis is essentially a backwards-looking method. If you look at the efficient market hypothesis, they've basically got three different levels of efficient markets. And technical analysis kind of lives in the first world of the efficient market, where it's a backward-looking analytic technique. It's saying the price was at this point, 1 minute ago, 5 minutes ago, 10 minutes ago, 20 minutes ago, 3 days ago, a month ago, whatever the time frame is, but it's looking backwards at prices and saying at that specific moment in time, this is what this security or this asset was worth. And based on that, based on the fact that a minute ago it was worth that much, and a minute later, how much has changed in a minute? Perhaps a minute later, nothing really has changed in the company. So it should be similar to a value that was paid recently. I mean, you get it in the property market as well. So I've just sold a house. So I kind of went through the whole valuing thing with the values. And I mean, one of the ways that a property agent values a property is they'll sit down and they kind of go and look at all of the houses in the neighborhood, and they see what did they sell at, what are the prices in that neighborhood that it's going for. And that's kind of like the technical analysis in a way, because it's looking at historic prices and it's saying all the answers are in that price. Then, you've obviously got charting, which we're going to go through the charting. So it's looking at the charts, looking at the history of that price pattern. When is it high? When is it low? It's trying to pick up seasonal patterns in the price. It involves indicators and oscillators, and it involves patterns in the price that can determine what's happening to the feeling in the market. So it's got a lot more to do with sentiment than kind of that hardcore, fundamental outlook. Now, what do fundamentals do? Fundamentals, it's more about that intrinsic company analysis. So an efficient market hypothesis, this is kind of the level 2 of an efficient market hypothesis, where it's not just backward looking. Fundamental analysis is backward looking, but also forward looking, because fundamental analysis will look at estimates on what will a company earn. If you're looking at something like Apple, how many iPhones will be sold in the next quarter? How many iPhones are expected to be sold 3 quarters out? How much will that translate into revenue coming into your company? All of that allows you to look forward into a share price and start to value future cash flows. And that's why people generally tend towards fundamental analysis and go, oh, but it's dealing with future price predictions. It must be more real. I don't know if real is the case, or it's more valid because it's taking into account future expectations, not just looking in the rearview mirror. It's looking at, like I said, future profit outlooks. It also looks at the economic conditions in fundamental analysis. What's happening in the broader economy that could influence a company and change these cash flows in the future. So again, thinking about the future. It's got to do with industrial analysis, and there's all different components. There's many, many different ways if you do a CFA to kind of understand the many, many different models that people use to kind of create, to understand the fundamental value of the company. But that's I'd say, a very high-level view of the basic differences between technical and fundamental analysis. Now, just because you're doing fundamental analysis on a share, it doesn't mean you should chuck technicals out, in my view, because the ultimate answer is in the price. And there's a lot to be gained by what people in the past were willing to pay for this asset. If you understand what's going on in the asset and you're looking at the historic prices, I feel like you've got a much better chance of getting a good entry point or exit point. And yeah, like I said, I've done this for a long time, and I can tell you, like, it's not guesswork. And a lot of the stuff, you draw trend lines, you take the turn on a trend. Sometimes you're wrong, of course, trends break, things change, but more often than not, you get much, much closer to the lows and highs of any price movement if you are looking at charts and technicals. So what is the basic tool of technical analysis? The first thing that anyone needs to look at when they're looking at technical analysis, the chart. What is a chart? I mean, if you guys are on this webinar, I'm hoping that you know a little bit about share prices and share charts. What have you got? You've got price on the y-axis, you've got time on the x-axis, and that's a basic chart. And you've got different ways of charting. So I've got a candlestick chart up at the moment, and there's different ways of charting. I'm going to show you a little bit of different techniques. If you go into your platform, and you can see there's all these different methods of charting. You can do a line chart, the candle chart, the open, high, low, close chart. There's all different ways of displaying this pricing data. Now, all of it is essentially the same thing. It's all just the pricing data on the stock. It's a different view of the same thing. The same as technicals and fundamentals are just two different views of the same thing, which is the underlying security that you're trading. So in this case, this is just a simple candle chart. I'm just going to zoom in so that we can chat a little bit about candles. So what have we got here? This is basically the high and low for the day. So on the charting package that we've got, just got you can set these things in ProTrader and say, give me the high and low, just draw 2 lines at the high and the low for the day so that I can kind of easily see what the movement in the share price is for the day. But yeah, a simple candle, like in a candle like this, okay, so let's say this is a 1-day candle. Essentially, this is all the pricing. This is giving you some information about 1 day's chart, 1 day's pricing movement. So obviously, if it's this I don't know what share this is. This could be an old S&P gold. But anyway, so yeah, so whatever it is, this is basically saying if this is a 1-day candle, during the day there's been ticks. So if it was a JSE listed security, it would open at 9 o'clock, it would close at 5 o'clock, and all day people would be buying and selling the shares. And every time there was a sale, so every time a buyer and a seller matched, so every time that someone made a bid and someone else made an offer that was in line with the bid, that would match, the trade would go through, and a new tick would appear on the chart. And there'd be this little curve of what's called an intraday chart. If you want to kind of compress all of that time, so the 1-day time frame, you can compress all of that into a single candle, and it's going to give you the 4 most important pieces of information just on one candle. So 2 of them are obviously labeled on here. You've got the high, which is the top of the wick. Here is 1,998, and you've got the low for the day, which is 1,930. And if this was a JSE stock, 12 cents. Then you've got these two candles. Okay, so I haven't got it. I'm going to show you on the next slide. But the top of the what's called the real body, that is the closing price of the candle, and the bottom of the candle is the opening price. So let's go and investigate that in a little bit more detail. Okay, so here it is all drawn out for you. Like I said, remember, the candle is a way of displaying the data. Yeah, so if we look at this, like every candle here is a single day, but it tells you information about what the trading was like in the day just at a glance. So, if you do a line chart, you can see that price up here. I don't know if you can see my cursor, but like basically the top of the real body, so right up at the top of the green. See if I can do a little mouse. Yeah, so here we go. So you can see a little right up at the top of the green, at the top of the real body here. That would be the closing price. If you switch this to a line chart, it would just be taking that one piece of information and it would be joining it to that bottom there, that bottom there, that bottom there, and you would have a single line just joining all of those things. That's what a line chart would look like on that specific, on the specific chart. But because you're using candles, it gives you a little bit more information. It gives you kind of the same information as an open, high-low, close chart, but most people prefer candles because it's quite visual with the red and the green. So when is a candle red? When is a candle green? A bullish candle is green because your open is the bottom of what's called the real body of the candle. So that's the opening price there. The closing price is at the top. And during the day on a candle like this, at some point, it would have gone down to a low, moved up to a high, and then finally closed at where the top of the real body is. When is a candle red? When the open is above the close. So as in, let's say the stock opened at 10 Rand, traded up to 11 Rand, down to 8 Rand, and finally closed the day at 8 Rand 50. That would create a candle that looked like that. Another way of charting, and we can play with this a little bit in the charting package if you guys aren't following, is open, high, low, close. This is an HLC chart. It gives you the exact same information. It just basically compresses the real body. And you know that the little tick on the left is the open, the little tick on the right is the close, the low is the bottom of the line, the high is the top of the line. The same the other way around. So there you don't need colors, but it's a little bit more difficult to go and look at these charts because it's not as visual as one of the as a candle, where you can kind of see 5 red candles in a way. The opens are continually higher than the closes. So that means that the stock is over a period of time, over a period of day, falling. If you get 10 red candles in a row, you had 3 red candles here. You opened, closed, opened, closed, opened, closed, opened high, closed low, opened high, closed. You're starting to get the sense that there's a downtrend in the stock. So you get a little bit more information around the share. So that's kind of like the basics on charting, and we'll chat a little bit more about it in a bit. Okay, so now let's look at some popular charting patterns, and I think this is all going to come together. This is just the basics, and it's all going to come together when we actually go and have a look at a couple of charts. Okay, so the first pattern, and we're going to kind of go and try and identify some of these patterns in the real market now, which is nice because it's 12 o'clock, so it's almost 12, so we can do it in a live market. Okay, so we've got head and shoulders. So head and shoulders is basically you've got, this is generally considered, a reversal pattern. It comes at the end of a movement. So here you've got the stock that's falling. It falls, it kind of keeps falling, and then suddenly it stages a little bit of a recovery. The bulls start to get involved. Then suddenly the selling resumes, and it finally makes its ultimate low. Then it kind of, again, has a little bit of a relief rally, but then comes to make another, well, in this case, it's an inverse head and shoulder, so it makes a right shoulder, so we've got a left shoulder. Okay, I can kind of, let me annotate that for you so you can see what I'm looking at. So I've got left shoulder over there, and I've got right shoulder somewhere. This has got like 2 right shoulders, but it's right shoulder over here. And then you've got the head over here. So that's your head and shoulders. And then you've got, once the head and shoulders completed, this little line here is called the neckline. You can see it written over there. So that's the neckline. And that signals a reversal in the stock. That neckline, as soon as the neckline breaks, a lot of traders will wait, and they'll just wait. So they'll see the setup forming, they'll see the reversal starting to take. This used to be a downtrend, lower lows and lower highs. That's a downtrend. It then starts to reverse, and it makes another low, but the low isn't as low as the previous low in the oscillation. That starts to give you a sense, wait a minute, the stock could be turning. And what they're waiting for is they're just waiting for a confirmation that this is now broken above the neckline and that the stock is going to start running higher. If that's the case, the general way that you do this is like a short-term trade. or if you're doing it as a longer term entry point, you've got a stock. We had like one of the stocks, like I mean, I'll see if I can look at it on ProTrader. Is Equinix. We just bought it. Okay, it wasn't a head and shoulders, but it was a long-term. It's a great company. Kind of looked at it fundamentally. We really wanted to buy it. It's got a nice long uptrend and it's just pulled back. But where do you buy it? You see it's falling and falling and falling. At what point do you decide now's the time I'm going to pick up the stock? You've identified it fundamentally as a buy, but you actually have to make a decision at what price do I buy this? So this is kind of one of the techniques that can help. But if you're looking at a stock that's falling and you want to know at what point you've already identified it's now too cheap, maybe it's coronavirus and you've seen the market screaming down, you're like, this market's going to recover at some point. I know I've got good buying levels, but if I buy today, I lose money because it just keeps going down every day. A reversal pattern like this can just give you a signal that, hey, wait a minute, maybe the selling is finished. You might be way below kind of those, the fundamental value levels that you were looking at, but it doesn't mean it can't get cheaper. And that's why you're looking for a technical pattern, just to give you a signal that this could recover. Short term, you look for head and shoulders, and then you look for a little bounce up. Generally, you take the distance between the, let's see if I can draw here. You take the distance between, where's the line? Okay, I can't draw, but it'll basically be, there we go. So it'll be that distance there. Your target is normally the equal to, oh, sorry, it's terrible drawing on my phone, so I'm using a mouse trackpad. But yeah, basically you get the same sense on the other side, like you get, so let's just draw here, there we go. You get, there we go, that's much better. So that length line, yeah, so those two arrows, the length of the down arrow should be the length of your target on the up arrow. You can see that on the right-hand side. If it's a typical head and shoulders where it's an uptrend, it makes a head and shoulders, it's kind of, a jump, a dip, it makes its new high, then it kind of makes a lower high. You can feel that the stock is running out of some of the momentum. Maybe it was a big news announcement that drove the stock up. Now suddenly it's starting to run out of momentum. You wait for it to break the headline, neckline at least, and then if you think that the stock is a sell, you can short it, make some money on the downside. Obviously, the reverse pattern works as well. So I'm going to have to delete all of this stuff. Yeah, this is clear. Okay. Yeah. So that's kind of the basic head and shoulders. Let's just clear the chart. Cool. Okay. So yeah, now we're going to look at the next one. So the head and shoulders is probably the most popular pattern in the market. The next one I'm going to look at is bullish and bearish pennants. So this, I believe, is Aspen from 2012 to kind of 2015 when it became the darling stock of the JSE. Because you just buy Aspen and make money, and then Aspen would consolidate, and you buy Aspen again, and you just wait for the next flagpole. And we did it for years, and it was amazing because you just every day you'd be like, "Is Aspen down a bit? Great, let's just buy it because it's going to." Yeah. And it was kind of the feeling for years on Aspen, and it's why I think it just generated such huge popularity. And it was just basically, they either called flags or pennants. And it was just flag pennant, flag pennant, flag pennant, and I've kind of drawn a whole lot on there. And it was like an awesome time to trade the stock. I think maybe Bitcoin people are feeling that at the moment. But yeah, it kind of spikes. You get this consolidation phase, then it spikes, bit consolidation. So I've just done the clearer pennants up there. And this is opposite to head and shoulders, which is a reversal pattern. This is a continuation pattern. So this is one where, you've got a stock that's in a solid, got a lot of momentum behind it. It's in an uptrend, and it's something that you want to, you just want to write where they say the trend is your friend. You don't go, oh, look, it's spiked, we should short it. No, it's above its moving average. Everything is telling me that this is a buy. I don't need to know anything about this company, but that chart looks like a buy. And then it's kind of, you also again look for entry and exit levels. So, if you've seen you identify a flag of a continuation pattern and you're looking for a short-term trade, you can kind of look at the length of the last flagpole. Again, you set, in this case, you've got a little downtrend that's forming. And now when do you want to get involved? You don't want to get involved until it's made a decision. And we'll look at rising wedges and falling wedges in a bit. So you don't want to really get involved until it's made a decision. So what you want to do is you just want to wait for the next breakout. So you'd set your entry, you can do it with a stop limit order. You set your entry a little bit above where the share is trading. So as soon as it breaks out of that pennant on the upside, you can grab the stock. Your automated system will just take the stock immediately, and your target will be kind of the length of the previous flagpole. And you can just grab the next flagpole on the way up and get out of the stock. If you're trading derivatives, you want to obviously, these days are not so bad. Derivative trading is fun again because interest rates are nice and low. But when you're trading derivatives and you've got carry costs and swap fees that are eating into your profits because interest rates are very high, it becomes a little bit less fun, and you want to be in the market for such a short time if you're trading gear. But if you're buying and holding long term, all this is telling you, as you're not looking at these kind of short term targets. You're just saying, okay, cool. I need an entry on this thing. Where's a good time to enter? Let's wait until there's a clear signal to buy this share. Okay, cool. So going a bit slowly here. Okay, next one is so also a very, very popular pattern, and it does sometimes it becomes part of almost like a very lopsided head and shoulders pattern. It's a cup and handle, so you can see this could also be a head and shoulders. It could be it could be kind of a left shoulder here. It could be a left shoulder there as well. But yeah, like I said, maybe this isn't the greatest example of one, but they generally form like this bowl pattern at the bottom. This is kind of pull. This is on Amex. I didn't find it. I think we can probably find a better cup and handle on the local market today. But yeah, essentially it's kind of a trend that is bottoming out. You kind of got a whole lot of like consolidation and turnaround at the bottom there. It breaks out of the cup. And then it kind of forms the handle where it dips off and then bounces back up. And there you've got kind of like almost half a head and shoulders, if you want to put it that way. Your target is very similar to the way that you set up a target on the head and shoulders. You would then just take let me just go grab some drawing tools again. So you would grab the length of that, and then you would look probably for the length on the way out. But you would be buying by the handle breakout. So as it's forming the handle of the cup, as it breaks kind of out of that handle, that's when you want to buy it, and then your target is going to be kind of two lines of the same length. Would be the right way to do it. You've got a nice little trading strategy on the right hand side there. If you are confused by this chart, like I said, I think we can probably find a better cup and handle if we go look in the live market now. Okay, I just asked to share the slides, and we'll send it. We'll take a screenshot of this while you can. So this is just like a little thing of all different patterns that you can look out for, and we're going to, like I said, we're going to go and look for them here. One of the most popular: double bottoms, double tops, triple bottoms, triple tops. These are patterns where the stock goes up, it tries to make it makes a new high, it comes down. So let me just get my mouse so that you can see it. Yeah, so it kind of goes up, makes a new high, comes down, tries to make a new high because it's trying to continue an uptrend, but doesn't make a new high. It fails at what would be called like a horizontal resistance. It starts to turn down and it breaks below its low. Now suddenly you're starting to think, is this going to be a trend change? Is the security changing trend? If it's changing trend, you now have an opportunity to go short in this case. Like we've got all the stock. So each of these are little trading, like short-term pattern trading strategies that I've got up on the screen. Yeah, let's just actually, if you want to take a screenshot, let's just turn the video off so you get a nice screenshot. Yeah, so there you've got, okay, double top, double bottom. As it breaks out of the bottom of as it breaks that kind of like that near-term low, that's when you enter short. Your target, your target can be much lower. I wouldn't say it has to be the height of the double top. And then you put your stop loss a little bit if it breaks back into the pattern you want to get out. Okay, we've already talked about head and shoulders, inverse head and shoulders, double bottoms, double tops and triple tops, double bottoms and triple bottoms. They're just inverse patterns. So a double top happens at the end of an uptrend, a double bottom will happen at the end of a downtrend. Hopefully you got your screenshots. Okay. Okay, rising wedge, falling wedge. Okay, so these are interesting now. So okay, on the left hand side here, so everything to the right, to the left at least of that line, these are all reversal patterns, right? We're now going on to continuation. A reversal pattern is the trend is happening, and you're looking to say when will this trend end? Now they say the trend is your friend. You should always be trading in the direction of the trend, but quite often people try and pick the turn in the trend. It specifically works for me. Like I'm always looking for reversal patterns because I tend to trade in channels. So the stock will be coming down in a channel, doing what it does. It forms a head and shoulder, and now I'm trading in a broader trend, and I just want to trade the upstroke of the channel. So I'm looking for reversal patterns all the time. Another reversal pattern. Okay, so we're going to look at. Okay, in this case, it's a rising wedge. but it's a rising wedge. It's the only time a wedge forms a reversal pattern is in a rising wedge, when the stock kind of keeps going up in the wedge. The wedge, so it's an uptrend and it's a rising wedge, as you can see here. So it enters an uptrend. What is that signaling? That's signaling that the stock is trying to go up. The buyers are starting to flag, but it still wants to go up. There's still optimism and it's still going up. But the stock is starting to show exhaustion. There's just not enough buyers to keep the momentum going, and that actually becomes a reversal pattern. It's a short signal. Now the difference between that, okay, the same as I said, falling wedge. If it's falling and then it kind of tends to, the wedge is kind of, so it falls and then the wedge keeps on falling. So it's a falling pattern and a falling wedge. That's also a reversal pattern. Now continuation patterns are a little bit different. So you get a falling wedge and a rising wedge as a continuation pattern as well. But notice the key difference here. Instead of the wedge pointing in the same direction as the channel, the wedge is pointing against the direction of the channel. So in this case, so if we look at the just put the mouse again, so if you can see on this case, it's heading upwards. It's an up channel that we're in an uptrend at the moment, and suddenly, so it's kind of like a flagpole at least, and then you get a wedge, but the wedge is a falling wedge in an uptrend. So the wedge is a reverse. That doesn't signal exhaustion. That just signals aggressive profit taking, and that genuinely ends up in a continuation pattern. Okay, so I've got a question here. Chart period 1, 2, 3, 5 years. It's a good question. I think I'm going to hold the answer to that question until the end. Because we're going to kind of look at different charting timelines as well. Okay, so the same. Okay, so that's a falling wedge in a rising channel, the same as a rising wedge in a falling channel, just the opposite. This is a continuation pattern. The channel should carry on in the same direction as it's going. Bullish pennant, bearish pennant, very similar, but instead of having kind of pointing downwards, it's a wedge that's pointing sideways to create what's called a pennant. I just call all of it, I generally, if I'm talking about it on the desk and I'm like, I just call them flags. I call them all flags. Pennant, flag, all of it. It kind of all ends up as being called flags by me in general, but yes, there are technical differences between them, but they all kind of signal the same thing. A bullish rectangle, a bullish flag, it's up pennant, it's a continuation pattern. It's flagging, you're in a consolidation phase, you maybe just had a results announcement, everyone's excited about the stock, and buy. All the initial people, all that initial demand for the shares are kind of is satiated, and everyone goes, oh, is that high enough? And everyone kind of relaxes, and you get this little consolidation. Has it gone high enough? Now, think about what's happening in the real world. There's good news on that stock. The stock is bouncing for some reason. There's probably good things happening in the company, and often that, when good things happen, stocks and stories build momentum, people become optimistic, more people hear about the story, and then it takes another leg up. Okay, sorry, candle, 1 day, 1 week, 50, okay, yeah, okay, good questions, I'm going to answer them in a bit. Okay, cool. So that's so those are kind of like the continuation patterns, each of those giving us a little bit of signal of direction, and then you get kind of bilateral patterns as well. Now these are interesting patterns as well. So they don't actually signal whether there's going to be a move up or down, and that's not always a bad thing. It just signals that something is going to happen. Now I remember, there's ways that you can play that with option strategies, which is really cool as well. Where you can put on strangles and straddles and all those kind of good things where you're essentially betting whatever happens, you just don't want the stock to flatline. It must break higher or it must break lower. And if it breaks either way, you'll make money because you kind of do a put and a call at the same time. But in this case, all it's saying is that there's a consolidation phase. Like these flat top ascending triangles and descending triangles, it can break either way. They're not particularly strong signals one way or the other. But what you do know is that there's a consolidation, the volatility starting to come out of the stock, and it's got to break one way or the other. That kind of little consolidation pattern is going to end, and it's going to break one way or the other. So those are kind of things that you can look out for in live stock pricing as well. Let me just clean up all the drawings. Cool. Okay. Excellent. Okay, support and resistance systems. Okay, so I'm really going to go into it. Okay, so I'm going to run through these quickly. Support and resistance are really simple, and because they're so simple, I think people use them all the time. And if everyone's looking at the same charts, we all see the same support and resistance lines, and then we all buy off them. So Here's an example. A support line is basically, this is a horizontal support, and you just see at $51.25, the stock keeps on bouncing up. Now that happens a lot on less liquid stocks as well. So I actually saw it on Rand Dollar this morning, so I'm going to show you that. But basically, if there's a big order, the mechanics of it is, if there's a big buy in that market, and there's a desk somewhere that has got a huge order to buy something, and the guy's just lazy and he's not working the order properly and allowing the market to fluctuate and trying to get the best volume weighted average price, he just sits there and goes, bang, stick in like 100,000 shares at that price. It happens a lot, and we'll put it up there, a lot of round numbers. So, think about how we take orders. So someone will phone us and they'll say, okay, sell all my, or let's do Rand Dollar. They'll say, when the Rand gets to 14.50, take it up. They don't say, when the Rand gets to 14.51.251, please can you buy my, they just give us a round number to buy. So we sit there and we have to follow the instruction if you're sitting on an execution desk. So you've got to do it at exactly that price. So you stick in your order at the round number. And you can see it in volume charts. So I haven't got a volume chart up like that, but you can see, if you kind of invert it so that you take price on the one axis and volume on the other axis, you'll see these huge volume spikes at round numbers because there's a lot of buyers and sellers at those numbers. Now, what creates a horizontal resistance like that? There's a big, horizontal support in this case. There's just a big buyer there. Every time someone tries to sell there's someone that's willing to buy there. And that guy's just said to his dealer, buy me a million, what is this? This meta stock stuff. Okay, buy me a million XYZ company at $51.25. And that guy's just got his order sitting there. And anyone that comes and sells, I want to sell at $49. Too bad, you're getting $51.25. It's never going to break. It's what creates those horizontal resistance lines. And then you've obviously got like an incline support, which is this one in the bottom left. And you can kind of see, like as it goes up, these things kind of hit the support over and over again. It happens all the time. You get supports that literally have 15, 20 touches to a single trend line. Now, if you're going to be buying a share, where do you want to be buying it? Buy it on a trend line. Buy it as it hits a trend line and starts to turn. It's really simple. It's not rocket science. And remember, we're getting asked for opinions on this stuff like every day. Clients are phoning us all day. Where do you buy this? Where do you buy this? Where do you buy this? You don't have time when you're speaking to 150 clients or whatever the case is as a dealer to say, to kind of chat, no, let's go and apply this very complex technical method to kind of go and find out, no one's probably looking at the indicator, but the beauty of technical analysis is that so often it just becomes a self-fulfilling prophecy. Our desk, a million other desks in the world are all looking at the same trend line, and they all know when it gets to that trend line, that's where other people are going to start buying. And if other people start buying there, the market is also a herd. So if other people are buying there, the stock's going to go up. So what do? You want to buy at that price as well. And your volume will contribute to the market pushing up, and everyone's volume gets together, and it becomes a self-fulfilling prophecy. And that's why support and resistance works. Again, a lot of people look, and it's just, why they look at moving averages or why they look at simple moving averages, who knows? They just do. And because they do, it works. It's one of those kind of positive feedback loops. Like, it doesn't have to make sense as to why it works. It's just because it works, it will continue to work more. And that's very much what technicals are about. You don't need to know that the stock reported bad numbers because you can see it in the share price. If everyone's selling the stock and the stock is starting to fall, and you're fast enough, you don't even need to look at the numbers because the stock is falling, get out of the stock, and it might keep falling. You've got momentum behind it. So that's kind of what technical analysis does. Like I said, don't use it in isolation because, of course, when you look at a share and suddenly it's falling, it's like, how bad is this news? If you don't go and read the news and you don't understand what the thing is, you could quite easily just be one of the weak hands that goes and sells it. You have no idea why it's being sold. You don't know if this is a major issue or if it's a minor issue. All you know is that other people are selling. So, and that's I suppose one of the limitations of technical analysis. You don't have that in-depth knowledge. And that's why I always say the two, they work together. They work together. It's not, you don't give up one or the other. Okay, so here's just a basic chart. Okay, I'm going to kill the video again so you can go and see it. Okay, so here's a very, very basic chart all drawn up for you guys of support and resistance lines and how you would trade support and resistance, like without knowing anything else about technical analysis, without knowing anything about charting, without even knowing what instrument this is. You could make buy and sell decisions that are fairly decent buy and sell decisions. Okay, you can see bang, 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 all the way down on the left-hand side, on the very left-hand side. You can see it kind of hitting all those trend lines. Let me do some, draw some stuff here. So we can, go. So you can see all these little like knocks into the. Okay, so that one kind of went through. I didn't draw this one so well, but yeah, you can see that's kind of like all the little support and resistance is holding. Now, when it hit there, all you need to draw a support, and if you extended that a little bit, it would have touched up at the top as well. All you need to draw a support and resistance trend line is 2 points. Once you have 2 points and then you've got a third point, you're starting to get confirmation that this is a trend. So often it trades in channels, and this is how I trade generally. Like if I'm messing around on the market, which we do because it's fun. It's not necessarily, we use it to help us with the execution of big portfolios that are long-term stock portfolios, sure. But there's also something to be had for, just taking a couple of punts on Rand dollar or, an Aussie contract or whatever you might be trading Bitcoin if that's your flavor. But essentially, once you've set up a minor trend or 3 trend lines, you can now start to be quite confident that the trend is going to continue. And now what I would do in this, you always, if it's a downtrend like that, you maybe hit the bottom there, hit the top there. Now you've got 2 lines pointing. So you go, okay, you start to see a turn. You go, okay, that looks like 2 lines. Or maybe you wait and you get in there. You say, this is the 3rd time it's touching the trend line. Let's go short off the 3rd line. So that would become our short. That would become where we hit our shorting. Then it falls. We make money on our short. It hits the bottom of the trend line. You could actually put a sell signal there if you. So you could, sorry, I'm making this chart a bit messy, but you could put a little sell signal in there. Okay, cool. So you could put a little sell signal in there, or you could just keep riding the trend, and then you could literally do a reversal. You could swing trade it if you wanted. You could do a little reversal. There, you could reverse your position and try and trade back to the top of the channel. I don't particularly like doing that. I find it's too aggressive a way of trading. It's very hit and miss. So what I would do, I'd say, hey, this is an established downtrend. I would have waited. A conservative way of trading the channel would have waited for the channel to set up, which would have been bang, 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 and you would have seen the channel set up, and I would have shorted there, and I would have maybe taken profit there, but maybe also just left it because you remember you don't know all this pricing data doesn't exist yet. So you don't know that's about to happen. So it could just keep falling. So I would probably just sit tight and see what happens. Probably wouldn't even get out of it. Then it goes back up. You don't panic because it's still in the channel. You wait and it falls more. You think, oh, it's probably going to go to the bottom of the channel here. You think it's going to go to there, so you stay in, but then it bounces back up. But you're still in because you're in the channel. So you just ride this channel all the way down. You ride it all the way down to this point here. Do you sell there? Of course you don't sell there. You have no idea that it's going to turn there. So you stay invested. I'm just going to take those guys off quickly. You stay invested, but then you suddenly get up to here. And you can see what's happening at that specific moment over here. You can see what's happening over here. It's hit the channel top again. So it's hit the channel top again over there. And it started to turn down. So you go, oh, I'm happy to remain short. And then something happens where it breaks out of the channel. And that's your channel break there. Now, channel breaks, a lot of people look out for channel breaks. It's one of like the easiest, it's a very like almost not certain way, but that's your channel break. That's where people started to get nervous. So I probably would have looked at that channel break and I would, if I was a very conservative trader, I would have said, I'm out of here. I'm not interested. I've got all this profit and I love taking profit, which is probably one of my worst habits as a trader. Is that I want to get out too quickly. You see that green and you're just like, yay, let's take profit. Not on our managed portfolios. Those are long-term. It's very long-term stuff. We only make a decision on managed portfolio when there's a fundamental change. They're fundamentally driven and quantitatively driven portfolios. I'm specifically talking about having fun and just trading for the fun of trade. So that's kind of where I would have exited. But what would I have earned over that little period? I would have had I would have made that. That would have been my profit on the channel. Really simple. But then it dropped all the way back down. I go, oh, it was a false break. And you might have heard that term before. It was a false break. I'm now out of the stock and the stock is still falling. And I go, you know what? I just leave it alone because it's not at the bottom of the channel. It's not at the top of the channel. And I call it quits on the trade. I take that line as my profit and let's wait to see what happens because I'm a conservative trader. Then we go, let's just go back to it. Then suddenly we see there's a second channel break, and that's where it's like a confirmation that the channel is broken, and everyone starts to go, wait, this long-term down channel is thing, and you suddenly get everyone diving in, and you get that huge candle that we talked about there. Everyone is, the open is low, the high is much higher, and the guys just scream into the market and pump the stock up. It hits the top of the channel, and now suddenly it goes down again. The guys buy it up, and you've suddenly got your new channel there. Oh, sorry. Whoops. You've suddenly got your new channel established. Now you start to go like, let's go long. Because now we're out of that channel, and now we can say, again, I would probably look at the fundamentals. I'd probably have a fundamental view if I was trading this. But if I had no view, and it was let's say a currency where you can trade long or short, it doesn't matter. If there's a change of channel, it shouldn't make any difference, because they kind of don't do anything over the long term anyway. So it kind of like it goes up, it resets the channel. You've got 2 points of the channel, and you go, oh, I missed it, and maybe I'm still not in it even at this point here, and maybe I go, okay, there's the channel. I'm quite confident to buy at this point here. It then kind of hits the top of the channel. It's breaking out. I'm really happy. This thing looks amazing. It goes down. It kind of hits the bottom of the channel again. It's up again, down again, up again. It's still all the way in the channel. I'm still sitting it, and I only exit when we get this channel break over here. So that, again, that's where my exit point is going to be. And what do you earn over the period? You earn the difference between that. That's what your profitable trade is going to be in that channel. And then you don't go short. You kind of wait. And now it's kind of the next step. I don't want to go through this too much, but the next step sets up a very messy channel. And there you kind of like, maybe you got in, maybe you didn't. And it's a very steep channel as well. And I normally don't trust such steep channels. But essentially, you just keep doing that. You keep working through it, and every time there's a confirmed channel break, you switch out of your position, and every time you're in the channel, you keep trading. It takes a lot of discipline to do it, but it works. And you can go through all of it, but it gets a bit repetitive. So that's kind of the thinking behind channel trading. You're just trading in a channel. Okay, and how does this work now? Okay, so the other thing is I mentioned moving averages as well. So another thing, those are just clean support and resistance lines. You're just joining areas that are, it's just joining 2 points and then seeing if another point will be hit. Another way that people look at support and resistance, they put on moving averages as well. So this is one I always show clients. It's part of the presentation. So it's a 144-day moving average on gold. And it's just something that, like, it's years old. I mean, this is when I was starting in financial markets, 2007 to 2013. 144-day moving average started picking up as a support line. And no one knew at that stage why 144-day moving average was the moving average that the gold price was picking up, but it was kind of picking it up over and over and over again. It just, every time it hit the 144-day moving average, it would turn off. And eventually everyone started to know that when this happened, and then it broke, and then everyone was like, okay, so everyone that was buying off these 144-day moving averages kind of got out. But then weirdly, it started picking it up again on the other way around. It then kind of broke the relationship. It kind of worked again there. It's kind of started again here. But it's just one of those things. So moving averages, often the 200-day moving average, the 50-day moving average, and the 21-day moving average are act as support and resistance. Why do they act as support and resistance? Because everyone sees them as support and resistance. So they do. Cool. So let's look at the candidates. I think that's it. Again, the last, okay, this is a quick thing. So I'm not going to go through this because we're kind of running out of time. I wanted to look at some live stocks as well. So this is basically a moving average crossover strategy. It's not really pattern trading or anything like that, but basically that's called a death cross. That should be called a golden cross there. That was kind of like the start of a golden cross that failed, and then an immediate death cross after. But this is another strategy that people use to buy and sell shares. Like, it's a little trading system that they use. Every time the short-term moving average crosses a long-term moving average, they see that as a sell signal. And every time a long-term moving average short-term crosses the other way, so it crosses up through a longer-term moving average, that's a buy signal. And it's like you kind of tweak the period of the two so that it becomes more sensitive to the time when the actual share price turns. But it's a lagging indicator that momentum in the stock has changed. And people use that as a little trading system to kind of buy and sell and kind of create those buy and sell levels as well. So that's just something a little bit extra for you. Okay, let's more drawings. Okay, when to apply technical analysis. Okay, we've talked about this at length. So yeah, short term versus long term, and this is kind of where I'll answer your questions, Charlotte. There's nothing wrong with charting over a long period of time. So like I said, that gold chart is a multi-year chart. I find that technical analysis works best, and it's just I suppose, like my person. It's not to say a pure technician would say you can use any time period for this. You can do decade-long charts, and you can do 5-minute charts. It doesn't matter. I tend to think of charting as a more short-term, more applicable in the short term, and generally between times when there's fundamental news, because it picks up patterns in markets that don't exist. Okay, well, they're not that don't exist. That patterns in markets that are hard to determine why something is happening, but it is happening for a reason. You might not know what that reason is, and that's things like maybe there's a commodity fluctuation, or there's a currency influence, or whatever the reason is. I mean, maybe it's things like trading oil a while ago, and at 8:30 the oil contracts just go berserk every day. It's kind of like a closing somewhere. I wasn't sure why, but you kind of like recognize the pattern at that time this happens. So it kind of, for me, it works better in the short term. But yeah, when I kind of feel like when you fundamentally, so it works for me. The best time to chart is intraday charting on big contracts like Brent crude oil, currency, that kind of stuff. Really cool, really works well. But I say careful, new information careful. Like I would say charting works well between results announcements. When a results announcement comes out, if the company is getting hammered, it doesn't matter what the chart looks like, the stock is going to go down. If it misses expectations and analysts start downgrading the stock, it's going to fall. So they are more rely on the fundamental stuff. But when there's like kind of an absence of news on a company and it's just trading, because it's just trading, and it's just people buying and selling, and it's kind of the more natural ebb and flow of the market. That's when I find technicals more useful. Not to say that there's any specific term that you can use. You can use 1-minute candles, 5-minute candles, hourly candles. What do I use if I'm trading intraday? I normally use a 5-minute candle. Sometimes if I'm really watching the stock, then I'll go to a 1-minute candle. But yeah, normally 5 minutes is fine, and then I look at 5 minutes a daily. Sometimes, depending on the charting package, it's easier to flip it to a weekly. You can look at hourly, you can look at 30 minutes. It really doesn't matter, because it's all just different views of the same thing. I would say be very careful of charting in low liquidity as well. So I've got a nice low liquidity graph for you here, and you can see these flat lines. Any share price chart that has these flat lines in it like that, it's a very illiquid stock. There's a story, I can't remember what stock it was on. It was one of the Gupta-linked companies where one of the traders went out, and because it was so illiquid, they could kind of set the buy and sell prices. So they actually drew the bird. They drew like the middle finger. The guy got fined. It wasn't big amounts of money, and everyone in the kind of industry kind of chipped in and paid off his fine for it anyway, because it was just really funny that he was giving the finger to the Guptas. But the point is, when you've got a very liquid, a trader, sitting and concentrating can actually make the chart do whatever they want the chart to do. So it's less, it's not picking up general trends or anything like that. It just happens to be that the bid and offer is really wide on the stock, and someone sells 10 shares, it can push the price all over the place. So you get very erratic kind of data. I wouldn't read too much into that. And that's why I say that the kind of instruments that it works really well on are the super liquid instruments. So like Brent crude, currency, things where like a big order isn't even going to push the stock around, because it's a massive contract with huge liquidity in it. Then it does tend to trade better on a technically. Okay, so cool. Let's look at, we can look at, I haven't left much time for it, but okay, so we actually finished. That's the hour. But I'm going to have a quick look at we can have a quick look at practical stuff. So that's the end of the presentation, but I'll stay on and we can do some Q&A now. So if you guys want to have a look at any practical stuff, we can go and look at some live stocks together, and we can kind of go and build some charts. We can go build some charts on the platform. Okay, let me just switch switch across. So yeah, but the official presentation will be over. So I've kept time at 1 hour. But now it's Q&A session. So yeah, it's for questions and answers. Let's share. Let's do cool. Okay, so now you've got okay, cool. So I'm just gonna set up a big chart for you guys. Whoops. Yeah, and I'll show you some other stuff if you want as well. Okay, so this is essentially okay. So we've got euro dollar up at the moment. We can do, let's go and look at some. I've been trading a lot of rand dollar because we do offshore transfers, so we're kind of watching rand dollar all the time. You kind of get a very good feel for where the levels are on something. So you want to take a view on it. But yeah, so this is rand dollar. Okay, so to switch, if you guys can see it. So if I want to switch the time period, I just come up to the top here. And you can see 1 minute, 5 minute, 15 minute, hour, 1 day, whatever time periods you want. Okay, let's have a look at the chat. I think we've got a first question. Okay, can you do live analysis on first round? Yeah, cool. Let's sorry, Karen, and yeah, okay, let's do a live analysis on first round. Yeah, guys, stick up any stocks that you want to have a look at. Okay, charts and period 1, 2, 3, 5 years. Okay, I think I've answered that. Candle 1 day, 1 week, moving average 10, 30. Okay, so I think if I were to answer questions, but for me it's 200 day, 50 day, 21 day moving averages. But not to say, like I said, like on moving averages, just to answer that question. Moving averages, that's not to say that other moving averages aren't very valuable as well. And often one type of security might be picking up. Like I said, 144 day moving average. Who looks at that? No one looks at that. But if the stock seems to be touching that for whatever reason, technical analysis is about recognizing the pattern. It's not about understanding why the pattern exists. It's about seeing the pattern and seeing. You might not know why at 8 o'clock every day oil does something. There might be there probably is a very good fundamental reason. I'm not a hardcore oil trader. All the hardcore oil traders are probably laughing. Okay, at 8:30, that's when London does the oil auction. And I'm like, oh, I didn't know that. But I do know that 8:30 it happens. I'll recognize the pattern at 8:30 this always happens. So I can exit my positions before that because I don't want to get caught in hooked in this big volatility. So whatever moving averages you want. Candles 1 day, 1 week, you can flick your candles to whatever. So whatever your charting time period is, that's how long your candle is going to be. Okay, so let's look at first rand quick, or let's look at let's look at first rand quick, and then we can go look at some rand dollar as well. Okay, so this is first rand. Okay, so what's happening on first rand? Okay, so this is you can see I've got it on a 1 day chart up at the top. I'm just going to pull some more annual data into first rand as well. So okay. So without knowing anything about the world, because you've been living in a hole for the last 4 years, you don't know anything. You know something very dramatic happened around February, March, April last year, the first round, where it basically dropped by half. Of course, it was the coronavirus, but you can tell, you see what I'm saying? With charting, you might not have the fundamental knowledge or the real world application, but it is reflected in the share price. Anything that happens in the world will be reflected in the share price because the ultimate answer is always going to be what is an asset worth? It's only worth what someone else will pay. And this is the history of what everyone has paid for first round. Okay, cool. Let's look at some technicals. Okay, so I'm just going to let's do simple support and resistance like we've been talking about. Okay, so let's see. Like that would probably be the trend line there. Now, what I normally do is, okay, so then I'll just do a channel line. So you can basically flip it to a channel, and you can kind of see that. Okay, so it's not a perfect channel there. Now, what I often do is like as a little technique, you see that's kind of like the little channel that it's setting up. You've got 2 points down at the bottom. It's kind of setting up in that channel, but often what I do there. Okay, so I like to scroll out and see the big patterns behind things as well, because often you'll miss the big stuff. You can see there's a trend line there because you've got 1, 2, 3 touches of that trend line. That definitely is a trend line. Let's go see if there's a bottom. It might not be a channel. Yeah, it's a little bit of a channel as well. So you can see if I do the annotation here, no, I want to pause my screen share. Okay, so you can see it kind of touched there, it touched there. It's touch, okay, and then it's got multiple little consolidation periods there. It almost hit the channel bottom there as well, and then it hit the channel bottom there. And there you can see the break, which was the coronavirus break there. So it's, yeah, it does look like there's a bottom of the channel. It's not a particularly strong channel bottom, but there is one there as well. Okay, so I'm just going to, okay, let's grab that and move that back. So yeah, there's a little bit of a channel bottom there, but okay, so I just want to look at the context of the larger trend, and then let's go and zoom in and see what's going on. So I'd say that's probably, yeah, so you can see I kind of missed the bottom there. So it's probably more a little bit up. That's probably where the channel is sitting at the moment. But now a little, not a trick, but it's like, remember when we're looking at candles, and we talked about candles earlier. Candles give you a lot of information, and sometimes probably the most important information on any stock is the closing price. So what you can do, and I often do it, I just hit the indicator, not hit the indicator, I just hit the type of chart that it is, and you just flick it to a line chart as well, because now you're talking about only closing prices, because now you're just charting on closing prices, and you can see that that channel maybe, like that channel might be a little bit, and that's often if you see, if I'm doing the technicals and it goes out, and we send an idea, you know, you might see the wicks of the candles going through, because we would have actually checked it, and we would have seen, you see, there's the channel. You see, you've got 1.2 points, 3 points, and you've got the exact top of the channel at those points. So that for me is first range channel at the moment. It's a very gradual recovery channel, but where would you be buying first round if it was me? Okay, so you can see there's also, it does seem to be a horizontal channel, a bit of horizontal resistance there, maybe not, yeah. So you can see that as well. So that's like that point there. Then you can see that point has picked it up as well. So it was resistance, turned, it became support, and then it was a break, and then there was support. It's picking up that horizontal channel. It's picked it up there again, it's picked it up there again, it's picked up there again, and now it's bouncing off that channel, that support again as well. So there seems to be a horizontal support there for me as well in the first round. So that's kind of the levels that I would be looking at first round. Like if I was in the channel, it's a gradual up channel. So I would technically be buying first round in this channel. I would be buying off lows rather than shorting off highs, because it's an uptrend channel. Now, what you really want to do is go and do your analysis of first round. If you are convinced that the banks in South Africa are just too cheap, they're going to start paying the dividends. First round is the best of the banks. They're going to start paying dividends again. You want to be invested in South African banks, but where do you buy first round? Now, I would say you can buy first round here. One, remember we talked about round numbers. When people phone us and say, hey, will you buy some first round? They don't go, hey, please buy me first round at 53.71. They don't say that. They say, will you buy first round if it gets to 50 rand a share? Cool, we'll put in big orders. And you'll see huge volume going through at about 50 rand a share. And that's why you're going to have a support at 50 rand. That round number is going to be supported 50 rand, which is without even looking at it. Okay, so we did 15.27 as the support when we looked on it. But I could actually just change that to 50 rand exactly. That 50 rand level is what's being picked up on first round. That 50 rand level is key on first round at the moment. And now, yeah, like I said, it might break below the 50 rand level, but I don't think it will, because like you've got a channel support like 1 rand lower. So I'd say it's a fairly safe bet to buy. Like I would probably buy first rand at this stage. So I'd say first rand is a buy right now. And if you're short-term trading, you would be looking for the top of this channel. So you'd be looking at 56, 57, call it, yeah, let's say 50, I'd say 56 rand 50. So you're looking at about, what, 13% upside on the stock if you're going to buy it. Obviously, if you add gearing to it, you're going to make a whole lot more than that. So let's just go. So on the platform, you can always go and check out symbol info. So I've just put a symbol info. I'm just going to link these two. So I'm setting up the platform because this is my laptop. So let's just go back to FSR. Okay, so first round. So there's our first round chart, and you can see this is first round. Okay, so the margin requirement on this is 17%, so it's not what it used to be, but you're going to get some leverage on it, which is cool. And obviously, if you trade derivatives off there, you know, you're gonna make a multiple of your return. But yeah, so I'd say about 13% in first round upside from here. I wouldn't set this if you trade in short term. I would set the stop loss then below this level. So looking at it where it is now, I'd say set your stop loss, and even if you want a deep stop loss, I'd say set it at 47.90. You could set it even at 48.15, and then I wouldn't target the top of the channel. I'd target this old high, over here. And we can actually flip it back to candles quickly. So let's flip it back to candles and just see what's happening. Yeah, so I would do it inside that height. Yeah, I think 56.50 is maybe the right, but you could even do it a little bit more conservatively, like a 55.50 target. That for me would be the target on first round. And that's how I would do short-term targets on first round. Again, you can go and put on oscillators like RSIs and all sorts of other things if you want as well, to go and see what's happening on it. Yeah, again, so a lot of guys will look for a crossover on first round down there. Obviously been doing some things on first round. But yeah, so you can see the oscillator starting to become oversold. Yeah, I don't think it's a bad level to be looking at buying. I don't think it's a bad level to be looking at buying first round. Let's just have a look at. Just want to look at another indicator as well. Okay, so let's look at. Let's put on some moving averages. So we'll do. I'm just going to do a simple moving average. So you just type SMA. Let's go and look at where the 200-day moving average is. Okay, 200-day moving average is a long way down. That was the big coronavirus kind of sell-off. It kind of did pick up support there, but it's not picking up. You see, and this is what I'm saying, it's not picking up the 200-day moving average at RSI. It's not picking up the 200-day moving average at all. So let's go and look at, we can look at, sorry, the other moving average we look at is sometimes the 100-day moving average. Yeah, so there's a 100-day moving average. It's kind of hitting into the 100-day. It did pick up a 100-day moving average over there. It's picking it up again. It's not particularly strong moving. No, but there you can see it's picking that up as a resistance line as well. Yeah, let's just get that autoed. Yeah, 100 days seems to be where first round trades into its 100-day moving average quite often. It does seem to actually act as a support and resistance. So I'd say they're great times for a first round. I would definitely I probably wouldn't wait for the bottom of that channel that we were talking about earlier. So my mind's a bottom messed up. I deleted them. They went into my RSI. But yeah, so I probably wouldn't wait for the 47 rand level. I would just hit it and go from there. Yeah. Okay. So I'm way over. Well, I'm 10 minutes over time. Is there anything else that you guys want to chat about? Any other stocks that you want to have a look at? Anything else? Yeah. I suppose other kind of useful thing. Like I'll show you. Yeah, is there anything else that you guys want to have a look at before I can do first round? Okay, yeah. So then, if not, then I think we can kill it.